Good morning, students. Welcome back to this session on accounting. Yeah. So in the previous session, we were discussing amalgamation and we also started looking at the accounting requirements. Okay. We were closing the books of the vendor company and we were also looking at as to how the purchasing company will record the accounting entries or prepare the balance sheet. Yeah. So in that respect, we picked up one question. Yes or no? Yeah. So we picked up one question wherein we completed that in part. Okay, so wherein the first part required the accounting to be done or the balance sheet to be prepared when the amalgamation is in the nature of merger. So now we will move on to the part B. And I also remember that I asked you to take this as a homework. Yeah. So I'm not sure whether you have completed that or not, or you have been able to do that or not. So if you can just quickly confirm, okay, whether you have been able to do that. Over to you quickly. Okay, great. So Nitin has confirmed. Yeah, so Nitin has been able to solve this. Very good. And then I can see some queries coming in. Hardik is saying, yes, I have done, but there's a small doubt, which is okay. What about others? Yes, what about others? Okay, great. Tambeshwari has also done this. Good. What about others? Preeti has also solved this. Good. I'm just hoping everyone has done. Yeah, Rashmi, Sania, they have also confirmed. Okay, good. So it doesn't matter whether whatever you have completed was correct or not. Okay, of course, if that is correct, it's very good. But if let's suppose there was some corrections required, or if let's suppose you got stuck on some of the points, that's completely okay. Yeah? Idea was for you to go and attempt that. Okay. Yeah. So now we'll move on to that part B. So if you have completed that, it's good. You can just look at as to how this is required to be done. Some of you who have not completed, yeah, so they can just now look at the solution along with me. Okay. Now, we were given balance sheet of X and Y. Remember? Yeah. And there was some additional information available. Y was taken over by X. So that's the question. Okay. And we were also given some information about the purchase consideration. In fact, purchase consideration was also something that we had computed. Excuse me. Yeah. So we also computed the purchase consideration. Remember? Okay. So now the purchase consideration, whether that is amalgamation in the nature of merger or in the nature of purchase, shall it change? Tell me. So will the purchase consideration change if the method gets changed? What do you think? Should that change? Tell me. So depending on the method that you will have, do you think, I'm just asking you logically, forget about the concept or the principle which is involved. Do you think that depending on the method that you will have? No. Yeah. So Rashmi says it should change. Yes or no? Why? Because when a company is taken over, then the purchase consideration will remain fixed. Now, the accounting methodology could be adopted by anybody in any manner. That doesn't mean that the buyer will pay more to the seller, depending on the accounting requirement. Correct. So these are all accounting requirements. Okay, but that's the transaction. Yeah. So for us, in a way, we can say that the purchase consideration is already computed. Okay. Because we have solved that, we understand what was the amount of purchase consideration. Okay. But there comes a very important point that whenever it's an amalgamation in the nature of purchase, okay, goodwill or capital reserve is required to be computed. Yes or no? So that is required to be computed. So that's why, as a first step, what we will do is we will get on to that computation of goodwill or capitals. Yeah. All right, so let's move to this part B and the computation of goodwill or capital reserve. Now, whenever you will start the solution, please remember that you will not know whether you are going to get goodwill or capital reserve. Okay, so whenever you will write the subheader in the exam, just write computation. Okay, whether that is computation of goodwill or capital reserve, don't write that till the time you get the final answer. The moment you get goodwill, say computation of goodwill. The moment you get capital reserve, say computation of capital reserve. Okay, so that your header looks nice. Okay, it shouldn't say both because both are not possible, and oblique also you should not use. Okay, be specific in terms of answering some of these things and while you are writing the solution. Okay, now we understand that the purchase consideration was, what was the amount of purchase consideration? 53 lakh 70,000. Yeah, plus the net assets. So all the assets less the liabilities taken over. So the total assets acquired were 66. Liabilities taken over were 8 lakh 50,000. So the net assets taken over are 57 lakh 50,000. Correct? Okay. Now, it appears as if purchase consideration is paid shortly. Shortly means as compared to the net assets acquired. Correct? So the moment we have that situation, what do you get? Capital reserve. Correct? So therefore, in this question, we have capital reserve equivalent to the difference between these two. That is 3,80,000. Correct? Yeah? All right. So now the required computation has been done. Now, some of you may be thinking that can we not compute this capital reserve? Okay. So this working that we have done, while passing the accounting entry, can we not compute this capital reserve as the balancing figure? Something that we had followed in some of the previous examples as well. And something which we had considered, or you can say the approach we had considered while we looked at part A. See, the answer to that, I would say, would be yes, you can do that. But if you can just add this working note, okay, so this will look nice in terms of the presentation. Plus, depending on the weightage of the question, which could be there in the exam, it is always better to include this working note. Yeah. Okay. Yeah. Fine. Now, let's get on to the accounting entries. Now, please remember that we are looking at the accounting entries in the books of purchasing company. That is X. Now, to begin with, what is the first entry X will pass? Business purchase. Business purchase to liquidators of Y Limited. Now, this business purchase balance will have to be closed. So, how will that get closed? By getting the assets, by assuming the liabilities. Okay, and this is nothing but the purchase consideration. So, the differential, therefore, goes to capital reserve, depending on whether you are getting credit as the balancing figure or debit as the balancing figure. Correct? Yeah. Plus, in this solution, if you have done the working, if there's a working note, you should always give the reference of working note. Okay. That is always important. Give the reference of the working note so that the examiner gets to understand that this capital reserve you have not completed over here. Yeah. So this is something which you have solved separately. Fine. And the narrations in the journal entries, please don't forget. Narrations always carry marks. Okay. Then this balance of liquidator that you have, this liability or sort of liability that you have created, So the purchaser will have to adjust this. So how will this get adjusted? By giving the assets. Okay. So therefore, liquidator of Y Limited gets debited. And what will be issued? Equity share capital will be issued. Preference share capital will be issued. And please remember, we talked about it, that both of these equity as well as preference share capital are getting issued at par. So even though some excess payment has been made to the preference shareholders, so that excess payment is also given by issuing shares at par. Shares are not getting issued at premium. Correct? Yeah. Shares are being issued at par only. Okay. This will take place. Yeah. So the debentures of Y Limited are debited, and against them debentures of X Limited are issued. So this again is at par. Correct? Okay. Now, after this, we need to get on to the balance sheet of X Limited. Now, in this case, in this particular situation, see the approach that is being followed under amalgamation in the nature of merger to prepare the balance sheet of the purchasing company, means the transferee company, is quite similar. Means all the assets which are acquired, they are added. All the liabilities which are acquired, they are added. Except for two things. I think we can talk about those points first, because remaining amounts, if you compare these two balance sheets, they are exactly same. Okay, so if you look at long-term borrowing, trade payable, other current liability, this was a simple addition of these assets or liabilities of two companies. Yes or no? Yeah. So now let's get on to reserves and surplus. Here comes the point which is important to be considered. Now, amalgamation in the nature of purchase. In this case, whenever there is any reserve, do we need to maintain the identity of those reserves? Tell me. If there is an amalgamation in the nature of purchase, so is the transferee company required to maintain the identity of the reserves of the transfer company? Tell me. Dilip says no. Pranav says no. Nitin, Neeru, they are saying no. Very good. Except for statutory reserves. Correct? Yeah. So unlike what we have done in the amalgamation in the nature of merger, wherein all the reserves were picked up. You remember? All the reserves of transferor company were picked up. So if you go look at export profit reserve, investment allowance reserve, profit and loss account balance, all of them were picked up. Correct? General reserve, all of them were picked up. But currently, in this situation, if you look at profit and loss balance, P&L balance of transferor company has not been taken. If you can see this, general reserve balance of transferor company has not been taken. This capital reserve anyways comes from the amalgamation adjustment. Okay. So what are the reserves of transferor company which have been picked up? Two, only two. Which are those? Export profit reserve and investment allowance reserve. So if you look at the calculation, these are the only two which have been picked up. Why? Because these are statutory reserves. These two are statutory reserves. So that's why only these two have been picked up. So what do you mean by picked up? Means their identity has not been lost. So they are carrying as it is. Okay. Now, if you take the total of these two reserves of the transfer company, can you tell me the amount? If you take the total of these two reserves of the transfer company, so what is the amount? Tell me quickly. Hardik says it's 3 lakh. What about others? I'm talking about total of statutory reserves of transfer company. Pranav has also computed this 3 lakh. Bhavna is saying 6 lakhs. I'm not sure where did you get the 6 lakhs from. I'm of statutory reserves of transfer company, Bhavna. Okay, transfer company. Larry, Manvi, they have all computed this. They are all getting 6 lakhs. And I'm not talking about the total of statutory reserves once this is included by the transferee company. Why? Because in such a case, you'll look at both the amounts, transfer as well as transferee. I'm talking about only the transfer company. So that's why if you go look at the balance sheet of Y, I'm talking about statutory reserves which are appearing in the balance sheet of Y only, that is 3 lakhs. Now, because these have been kept as it is, so that's why what will you do? Here comes that presentation. I remember some of you had queries around this. Some of you had queries around this presentation. Yeah, so are you now clear on this as to how this will be presented? Everyone clear on this? Yeah, clear on this? Clear on its presentation? Yes? Okay, great. Then I understand there's one query from Sai. He is asking, sir, amalgamation in the nature of purchase means something that we are just doing. Breakup for sundry assets. Please explain. See, no explanation is required because the breakup of sundry assets, you can go look in the balance sheet of Y Limited. It's given in the question. Yes or no? If you go look at the balance sheet, in the balance sheet, do we have only the total of the assets? Tell me. The answer is no. In the balance sheet, each and every asset is presented. Yeah. So if you go look at the balance sheet, you get the breakup. You can see all the items which are covered against that. Yes or no? Yeah. Sign, you are clear? Yeah. And that is where you have picked the 66 lakhs from. Otherwise, how will you pick this? Correct? Yeah. So I think you missed out on that point. Okay. Clear? Very good. Yeah. So I would say in this particular situation or case scenario, when the amalgamation is in the nature of purchase, there were only two changes. What were those? One, only the statutory reserves of transfer have been picked up, corresponding to which amalgamation adjustment reserve has been created, means a negative balance has been created. And so the second change is that the difference at the time of amalgamation, something which you had taken to general reserve in the case of merger method or pooling of interest method, now it's been taken to capital reserve. Why? Because we were not getting goodwill. Okay. Otherwise, if you look at all the other amounts, all the other items in the financial statements, they are exactly same. Okay. Yeah. So everyone clear on this? I think Prajwal has a query. He is asking, can you please explain how rupees 3 lakhs of amalgamation adjustment reserve? Sure. So I think we can just look at that in the working file. Okay, and just to avoid any sort of confusion, if you go look at the balance sheet, okay, so Prajwal, if you go look at the balance sheet of Y Limited, I'm talking about Y Limited, okay, only Y. This is given in the question. Yes. In the balance sheet of Y Limited, there are two reserves: export profit reserve amounting to 2 lakhs, because the rupees are in thousands, amounts are in thousands. Okay. And then you have investment allowance reserve. So what's the total amount? 3 lakh. Yes or no? So this is the total amount. Now these are the two reserves which belong to what? Transfer company, means Y Limited, which have been picked up, means which have been taken over, which have been picked up as it is by X Limited. Now please understand, X Limited has already recorded net assets of Y Limited. Yes or no? X Limited has already recorded net assets of Y Limited. Correct? Yeah. When the net assets of Y Limited are already recorded, so why should these items, because reserves are a part of net assets only. Reserves are a part of net assets only. So if the net assets have already been picked up, then what is the need to pick up these reserves over and over again? Why? Because that's the statutory requirement. That's the statutory requirement. Okay. So therefore, to balance out, if you take up something extra, so will the balance sheet match? The answer is no. There has to be one debit against the credit and the credit against the debit. So if you are picking up two credit balances and taking that, adding that to the balance sheet against which you don't have any debit, so what do you need? You need to balance it out. So how will you balance it out? By creating one debit balance. And what do you call it as? Amalgamation adjustment reserve debit balance, which you will present in negative. By doing this, what will happen? The impact will be zero. Impact will be zero. Understood? Yeah? Prajwal, clear on this? I think Tambeshwari asked for this calculation. So this is the only calculation. So there is no complex calculation. There is no formula you need to apply. Malu, you are clear as to why it is negative. So that is the reason it is negative. Okay? Clear? Everyone clear? Malu, Tambeshwari, Prajwal, clear? Okay, great. Prajwal is clear on this. Very good. Yeah. Any more questions on this? Any more questions if you have on this? Great. Tambeshwari is also clear. No further questions on this? Yeah. No further questions? No? All right. So now what we can do is, Apurv is asking, sir, surplus P&L is the balancing figure? No, that's not the balancing figure. That's the figure which is there in the books of transferee company. That's the balance of X Limited. So if you go look at the balance sheet, I understand you are not looking at the balance sheet. Huh? So my request to everyone, please look at the balance sheet. Okay, that is very, very important. Please look at the balance sheet of X Limited. Yeah. So you should refer to the question every time. That is very, very important. Okay, so I understand that currently we are not able to present both the things. Yeah, because of course that space is limited. Huh? You can't present everything. But you can always open this document with you. Okay, so please look at that. Yeah, please look at that. Okay. Then I think Preeti has a question. Preeti is asking, sir, if the preference shares are being paid at a premium, okay, then it will be under the method of merger or purchase. So it doesn't matter whether those are paid at premium or not, because that's the mode of purchase consideration. So merger method doesn't have any sort of condition like this. Remember, those were the five conditions. Yeah. So in those conditions, was there any such condition that the preference shares cannot be issued at premium? Tell me. No. Okay. So that's why it's no. I think you have yourself answered this. Okay. So let's not create confusions, because many a times what happens is that you keep looking for situations. Sir, if this will happen, then what will be the answer if this will happen? See, everything you can just apply on that concept, or you can say using that concept. So that's how you should approach this. Okay. Now what we can do is we can look at one more question. Yeah. Artik has a doubt. Yeah, sure. So I think I can come over to your doubts regarding the other questions later on. Okay, as of now, let's look at the questions we have been discussing. So if you can just move on to this question number 7. Okay. So if you can just move to illustration 7. Yeah, so I would advise if you can just open this question. And it's good if you can just keep that question handy with you, because on the screen when I'll go to the solution, then the question is not visible. Okay, so that's why it's very, very important that you keep this question with you. So you all have the study material. Huh? In case you don't have, you can always download that. Okay, so please keep that handy. Fine, please keep referring to that, because a lot of your queries will go away. Okay, you'll not get confused. Yeah. Okay, so now in this question there are two companies, K and L, and they are getting amalgamated, in which case a new company is coming up. Okay, then the balance sheet of these two companies I think is given to us. So we are given share capital, reserve and surplus. Fine. Then the notes to accounts are also given. In the notes, the split of the capital is given, reserves we have been told. Okay, then on the long term borrowings we have debentures and the secured loan. Okay, then I think on the intangible assets in the books of L. Now please remember, in the books of L there are two companies, L and K. Okay, so the first column, sorry, in the books of K there is a goodwill. Yeah, so please remember, at times you may also get confused, because the first column in terms of the numbers, that is for K and not for L. Yeah, but generally what will you think? First of all, L will come and then K will come. Yes or no? Yeah. So because of which you may plot different numbers against K and L and you lose out. Okay. Now, in the books of K means in the balance sheet of K, which is the transfer company. So K is the transfer company, means the company which is getting acquired. This company already has a goodwill. Yes or no? Now we'll try to understand as to what is going to be the treatment of this goodwill. Though we have already talked about it, but we'll see that again. Okay. Then we are given some additional information. Now this is important. Okay. The terms of amalgamation are as under: assumption of liabilities of both the companies, means their liabilities will be paid. Both the companies means K and L. Issue of preference shares of rupees 20 each in LK Limited at the rate rupees 18 paid up. Now the shares are not fully paid up. And I remember I was asked this question some time back, that sir, what if the shares are partly paid up? Okay, so you have this situation wherein the shares are going to be partly paid up. Okay, so we'll understand that. Fine. And we'll also try to understand if the shares are partly paid up, will there be any sort of complexity? Okay, so that is again, we'll try to understand. Then it says issue of 6 equity shares of rupees 20 each in LK Limited at the rate rupees 18 paid up. So the equity shares are also partly paid up. But please remember that both preference shares and equity shares, they are issued at a premium. Okay. In addition, necessary cash should be paid to the equity shareholders of both the companies as is required. Now, this is important. As is required to adjust the rights of shareholders of both the companies in accordance with the intrinsic value of shares of both the companies. So we'll have to understand as to what does it mean. Okay. Issue of such amount of fully paid up 6% debentures in LK Limited as is sufficient to discharge 5% debentures in K Limited at a discount of 5% after takeover. Means the debentures which are there in the books of only K. Yeah, you go and look at the balance sheet in the question. Huh? So the debentures are there in the books of only K. So if you remember, in the books of L, there were no debentures. Yes, they were there in case of only K Limited. Right? Now these debentures will be settled at a discount of 5%. Then it says assets and liabilities are to be taken at book values. Inventory and trade receivables for which provision at the rate 2% and 2.5% respectively needs to be raised. Trade receivables of K Limited include rupees 20,000 due from L Limited. So it appears K and L were transacting with each other prior to amalgamation, because of which L was required to pay to K of 20,000. So can you tell me what will be the adjustment for this? Over to you. Can you tell me what should be the adjustment for this? In respect of this receivable, which K is having from L, what is the adjustment or what should be the adjustment? Okay, so Hardik has answered this. What about others? So what should be the adjustment for this? Very good. Dilip says both these debtors and creditors need to be knocked off. That's what Ajay also says. Yeah. Some of you are giving the accounting entry. Great. Okay. Then I think Larry has a question. Larry is asking, sir, in this question, how do we get to know who is the transfer and who is the transferee? As it is given that both these companies amalgamate into a new company. I think you have missed out on the very first basic concept that we discussed in relation to amalgamation. See, there are a lot of examples that we have covered, or maybe some of the examples that you have looked at were those wherein there was one company taking over other company. But amalgamation is not limited to that. Remember? Yeah. So I would request all other students to help Larry on this. So can you tell me in this question, who is going to be the transferor or who are going to be the transferor and who is going to be the transferee company? Over to you quickly. Transferor and transferee. Who are those? Tell me quickly. Great. So Rashmi says LK Limited. LK Limited. So this new company which is formed, that will become the purchasing company or the transferee company. Sania, I think you're just telling it other way around. LK will be the transferee company, means the purchasing company, the new company which comes up. And in this question, there is not one transferor company. There are two transferor companies. What are those? L and K. Both of them are transferor companies. Okay, both of them. Okay, so effectively, there are three parties involved in this. One transferee, two transfers. Very clear on this? All right, so now moving further. Then the question says, LK Limited is to issue. In fact, there are a lot of points through which you can also get to know about it. So if you go look at the question, K and L amalgamate to form a new company. So what does it mean? K and L will come to an end, LK will take over. So that's one of the ways you can find it out. Then somewhere in this information, which we have discussed quite a lot, I think you should have understood. So it says issue of 5% preference shares in LK Limited. What does it mean? If LK will issue, so why will LK issue shares, whether preference shares or equity shares, to K and L? So it is written or not that LK will issue. LK will issue to whom? Preference shareholders of both L and K. So why is that done? Similarly, why LK Limited will issue equity shares to K Limited and L Limited? There again, you may get to know. Okay. Similarly, the question says LK Limited will issue debentures to the debenture holders of K Limited. Yeah, so there are a lot of points. There are a lot of points through which you can easily get to know who is the transferor, who is the transferee. Okay. Then if you look at this next sentence also. So it says LK Limited is to issue 15,000 new equity shares of rupees 20 each, rupees 18 paid up at a premium of rupees 4 per share, so as to have sufficient working capital. Okay, now what is the requirement of the question? Question requires you to prepare ledger accounts in the books of K and L. Okay, now because three parties are involved, so that's why what they have done is they have not asked for the accounts or the accounting requirements for all the three. For only two companies are required, or you can say for the transfer companies are required. Means you are just required to close the books of the vendor companies. In this case, there's not one vendor, there are two vendors. So that's why when you will close their books, what should you do? You should close their books separately. Now, that is again very, very important. The reason why I picked up this question, that when you will approach this question, you should not get onto their books jointly. Why? Because these are two separate companies, and if you close their books, then their books are also required to be closed separately. Okay, so that's how you should approach this. That's how you should look at this. Correct? Yeah. So now we are required to close the books of L Limited and K Limited. So now I'm not expecting you to answer this completely, but can you just simply tell me one thing, that whenever we approach this type of question, what should be our first step? Over to you. We have discussed this. What should be our first step? How do we begin with? Tell me quickly. There you are, very good. Hardik says the first step should be to calculate the purchase consideration. Yes or no? Same is the response from Abhishek. Pranav, Ajay, very good. Yeah. Nitin has the same answer. So every time you have these type of questions, what is going to be the first step? Because without that, you will not be able to move further. That is always to calculate the purchase consideration. Okay, that should always be to calculate the purchase consideration. So that's always going to be the first step. Okay, so that's why what we will do is we will move on to the calculation of purchase consideration. Okay. All right, so now purchase consideration has not been asked in the question. Question requires you to close the books of the vendor company. So that's why you'll have to do this calculation in the working note, because it's not the main part. Okay. So now let's get on to the working notes. Now, for calculating the purchase consideration, there are three forms of payment which are given to us. One, issuance of preference shares. Second, issuance of equity shares. And third, cash which is required and that is sufficient to pay off. So on this third component, we'll go later on. Let's look at the first two components. First of all, preference shares are required to be issued. So what is the information around preference shares? So it says issue of 5 preference shares of rupees 20 each. So that's the face value. Let's ignore the face value. That is not relevant to us. At the rate rupees 18 paid up at a premium of rupees 4. Means for every 4 preference shares held, 5 will be issued. And what is the amount? 22 rupees per share, which has rupees 18 as the share value, rupees 4 as the premium amount. Okay, now what is the number of shares? What is the number of preference shares of these two companies? So if we look at the number of shares of K Limited, it is 4,000. Okay, now can you calculate the number of shares that will be required to be issued? Currently it is 4,000. Okay, so now for this 4,000 shares, for every share held, you need to issue 5 at the rate 22 per share, at the rate rupees 22 per share. Correct? No, sorry, for every share held, you will issue 5 shares. Okay, so that means currently, if you look at K Limited, how many shares are there? 4,000. So how many shares are going to be issued by LK Limited? Can you tell me? 4,000 multiplied by 5. So that means 4,000 multiplied with 5. So you get 20,000 shares. Okay. At the rate rupees 22. So what do you get? 4,40,000. Everyone clear on the calculation? Yeah. Okay, great. Larry has also shared this. Good. Yes, moving further. Now, similarly, we can calculate the preference share consideration. Okay, consideration in the form of preference shares for L limited. For L limited, yeah. So there again we have 3,000. For every share 5 will be given. Yeah, for every share 5 will be given. Dharmik is asking, sir, where do you get this information from? So it's given in the question. Huh? That's why I'm asking you to keep the question handy with you. Okay, so that's why this question is required to be looked at. Okay, you should open this study material. Huh? This is the point. Yeah, okay. Dharmik, clear on this? Dharmik, clear? Tell me quickly. Yeah, very good. All right, so now this consideration in the form of preference shares we have calculated. Now let's move on to the equity shares. So it says 6 equity shares will be issued for every equity share held. So that means if you look at K Limited, so 48,000 will be issued. 48,000 shares will be issued. Yes or no? Yes or no? Yeah. And every share will be of value equivalent to rupees 22. Of rupees 22. Correct? Yeah. So therefore, what will happen? Therefore, your purchase consideration will become 10,56,000. Okay. Similarly, you can calculate this for L limited. Yeah. Yeah. Everyone, you are through with this calculation of purchase consideration in the form of equity shares for both the companies. Yeah. Done quickly. Everyone, please confirm. Through with this? Okay, great. Now, let's move on to the next point. It further says, it further says, I think somewhere there is information around cash. What is that? Necessary cash should be paid to equity shareholders of both the companies. Means both the shareholders of K Limited and L Limited will also get cash. Now, how do you compute this cash? It says sufficient amount that is required to adjust rights of shareholders of both the companies in the ratio of their intrinsic value per share. So what does it mean? You will have to compute their intrinsic value. Now the question arises that how do we compute that intrinsic value? Yes or no? So let's compute that. Yeah. Now, first of all, we'll have to put down all the assets and liabilities of K and L. All the assets and liabilities. Okay. So if you look at K Limited and L Limited, put down their assets and liabilities. So it's given in the balance sheet in the question. Yeah. So you have goodwill to begin with for K. Then you have land and building. Then you have plant and machinery. Then you have furniture and fixture. Yes or no? Then you have cash at bank, cash in hand. Both the amounts will put down. Then you are also given trade receivables. Okay, so if you go look at the balance sheet, in the balance sheet, trade receivables, inventory, these two items are also captured. But we are told that these trade receivables and inventory need to be adjusted. How? A provision is required to be booked on them. So if you take the provision, their value will be cut down. So on trade receivables, you need to create a provision of 2.5%. So if you do that, its value will get reduced. Similarly, on inventory, you need to create a provision of 2%. So that is where you are required to make the adjustment. Okay. So that's how you will get the total of all the assets of these two companies. Okay. Then you will plot their liabilities. So which all liabilities do they have? They have debentures, secured loans, trade payables. Correct? Yeah. So these are the liabilities that they have. Okay. Then moving further, then moving further. Now, what is going to be the next step? Now, if you look at the total, so can you compute their net assets? So in a way, what we have done is we have computed their net assets over here. So have you calculated their net assets? Please confirm quickly. Have you calculated their net assets? Over to you. Let me just also compute this. Yeah. All right. So now, okay, great. So I think you have calculated. No, so Preeti is asking, sir, will we calculate this by net assets method? Not really. Let's try to understand as to what is the question requiring here. Okay. And Nitin has shared the formula. Good. Okay. So now, once you have computed the net assets, what do you need to remember? It says that their settlement is required to adjust the payout to them in the form of cash in accordance with intrinsic value of shares of both the companies. Okay. Now, in terms of calculation of intrinsic value, what do you need? You need the net assets of both the companies. Okay. And if you look at the net asset value of both the companies, what is that? 15,60,000 for K Limited, 7,90,000 for L Limited. Now, is if these two were to be settled on the basis of net assets or the intrinsic value, then this should have been the total amount. Now, out of this total amount, we understand the amount which will be settled through shares. Yes or no? We understand the amount that will be settled through shares by preference shares and equity shares. So I'm talking about both the components. So that's the amount we know. Correct? Where do we get this amount from? We have already solved this. We have already solved this. For K, it is 4,40,000 and 10,56,000. For L, it is 3,30,000 and 3,96,000. So what do? You will reduce this amount from the total which is required to be paid to both these parties. So what is the balance amount they should get in cash? The differential figure. So that is going to be 64,000 by chance for both the companies. Okay. Clear on this? How will you calculate this cash portion? Everyone clear on this? In terms of calculation of the cash portion, are you clear? Yeah? All right, great. So now what we have done is we have calculated purchase consideration. And in terms of purchase consideration, we have also calculated the total components. Okay. So now the purchase consideration for K is 15,60,000. For L is 7,90,000. And the split of these three is also now known to us. So now, what is going to be the first step? Now the first step will be to pick up one company first and close its books. Please remember, you can't prepare one realization account for both the companies. Okay, so many a times you may be thinking that if you are required to close their books, why not prepare a single account? Why? Because these two are separate legal entities, they are separate companies. So if you will close their books, that should also be done separately. Okay, so therefore, we'll begin with K Limited. Yeah. Now, how do you close their books? In the question, you are not asked the journal entries. So something that we have done earlier, wherein we were preparing the journal entries in the books of the vendor companies. Are we required to pass those accounting entries? The answer is no. Okay, so that's why we'll not get on to those journal entries. We'll straight away move on to the ledger accounts. Okay, so now in the exam, at times you may be asked journal entries or the ledger accounts. So you should be prepared for both. Okay, now moving on to the closure of books of K Limited, realization account. This anyways is quite helpful. We discussed that whenever you will close, this anyways is quite helpful. Now, all the assets, all the liabilities you will transfer. So assets, let's start transferring a goodwill, land and building, plant and machinery, furniture, fixture, trade receivables, stores and inventories. Now in this case, please remember one very important point, that when the trade receivables and inventory are taken over, a provision was required to be created. Remember, question says a provision on this is required to be created when these are taken over. Remember? Yes or no? So if you look at the requirement of the question, yeah, let me just take you to the question, because many times you are not looking at the question. So assets and liabilities are taken over at book values except inventory and trade receivable, for which provisions are required. Now please understand, who will consider this provision? The transferee company, not the transfer company. Because even if you consider this provision, so what will happen? You will reduce the value of the asset, you will create a provision, so that provision will also have to be closed. Now because the company has to come to an end, so that's why entire value has to go off. So therefore in the realization account, you will put down the book value, you will put down the book value. Okay, and we were told that goodwill or cash in hand, they should be parked to the realization account only when they are taken over by the purchasing company. So in this question, you may be thinking, sir, why are we taking goodwill to the realization account, something that we didn't do earlier? Why are we taking cash in hand to the realization account? Because in the previous question, we didn't do that. Because in this question, they are saying that all the assets and liabilities are taken off. Okay, that's why you're doing this. Fine. Similarly, we'll plot the liabilities which have been taken over. Now, in the realization account, you will create a receivable from the transferee company. What is the transferee company? LK Limited. That receivable be in respect of purchase consideration. For the purchase consideration, you will create a receivable. You will create a receivable. 15,60,000. So that's the receivable you will create. Okay. Yeah. And in respect of the preference shareholders, there's something which you are receiving in excess. Yes or no? So if you receive something in excess, where will you record it? That will also go to realization account. So let's look at the preference shareholders account first. So now you will close the preference share capital. So how do you close the preference share capital? Yeah. So we'll debit the share capital. So this is preference share capital of K Limited. If you look at the balance sheet, this is preference share capital of K Limited. Yeah. And from the acquiree, from the transferee, you are getting 40,000 extra. So that will go to realization account. Yeah. So this is what you are taking to the realization account. This is what you are taking to the realization account. Okay. And the corresponding amount will be taken to the preference shareholders account. The corresponding amount will be taken to the preference shareholders account. Okay. Now, preference shareholders account we have closed. Now, what is going to be the next step? To close the account of equity shareholders. Now, first of all, let's close this realization account. Yes. So when you close the realization account, there could either be a loss or a gain. And we discussed that if there is a gain or a loss, both of them will go to the equity shareholders. Yes or no? Yes or no? Okay. So Rashmi has a question. Rashmi is asking, sir, this provision, only the book values are considered, will not create the provision? Yes. And why are you doing that? Because the assets and liabilities, the question says, if you look at the question, it says they are taken over at book value. Okay. But as around inventory and trade receivables, which are taken over at reduced book values, so who will record that? Who will adjust that? Transferee, not transfer. Okay. Because if let's suppose you will say that inventory is taken at 1 lakh higher than the value. Now, what is the role of transfer company? Very simple, to close its books. So let's suppose if you increase the value and then close, does it make any sense? No. So what is the objective of transfer company? To simply close the books. So whatever is appearing in the books, that needs to be closed. Whether that is getting at some excess value or lower value, that is for the transferee company to look at, not for the transfer company. Okay. Clear on this, Rashmi? Yeah, clear on this? Great. All right. So now moving further. In the realization account, what do we have? We have this balancing figure on the credit side. So what does it reflect? Loss. Yeah. So you'll park this loss, you will pass it on to the equity shareholders. Okay. So let's close the account of equity shareholders. So we'll debit the equity share capital. We'll debit the equity share capital. This realization loss will also be transferred. We understand that equity shareholders are getting paid through equity shares in LK Limited. They are also getting paid in cash equivalent to 64,000. Yeah. Now, what are they left with? There is a balance. Whatever balance that is there, that will go to profit and loss account. That will go to profit and loss account. And now the account of LK Limited also needs to be closed. Why? Because over here, this LK Limited receivable was created. This receivable was created. Yes or no? This receivable was created. So if you create this receivable, so what do? You'll have to close this. So how do you close this? By transferring whatever has been received. So LK will give equity shares, preference shares, and cash. So all of these three items will be distributed among the relevant parties. Okay, clear? Everyone clear on the closure of books of K Limited? Any questions around this? Yes? Quickly, huh? Can you please start closing the books of L Limited on your own? I'll also get on to that. But in the meantime, if there are any questions, any doubts, I'll look at those questions, doubts, huh, before I get on to the closure of books of L Limited. But can you start with the closure of books of L Limited? Over to you quickly. Please start closing the books of L Limited on your own. Rashmi is asking, same process is there? Yes, of course. It's going to be exactly same process. Aman is saying, can you please calculate the amount of transfer? So what do you mean by amount of transfer? I couldn't understand. Hardik is saying, sir, there is 5% debenture. I know that it will be adjusted by LK Limited. But can you please tell how to calculate the debenture numbers in LK Limited? Okay, I'll come to that point. Let's close the books of L Limited, then I'll come to that point. Okay. All right. Quickly. Aman is saying, okay, so Aman has a query. Aman is asking, sir, can you please calculate the amount of trade receivables? See, that is not required to be calculated. Okay. So now, what is the amount of trade receivables you will get to see? 2,75,000. It's given in the question. Yeah. So if you go look at the question, I think there again, the problem is same. This information is given in the question itself. So we are not calculating it. Understood? Yeah. So Aman, clear on this? So it's given in the question itself. You don't need to calculate this. Sai is asking, sir, since it is formation of new company, can we prepare LK Limited as a single ledger instead of two individual ledger entries? So what do you mean by single ledger instead of two individual ledger entries? I couldn't understand this. Preeti is asking, we got the loss of 37,175. It will get transferred to equity shareholders. So I am assuming that Preeti has done this calculation for L Limited. If that is the case, that is very good. Okay, so now what I'll do is I'll also move on to the closure of books of L Limited. And please understand the process is exactly same. There's no difference. Now what will L Limited do? Same thing. Same thing. Now in relation to L Limited, all the assets you will have to pick up. Yes. All the liabilities will have to be picked up. Then purchase consideration means LK receivable you will create. So this purchase consideration you will pick from the working note. Okay. And then we understand some additional payment was received from the preference shareholders. So if you go close the account of preference shareholders, you understand some 30,000 extra has been received. So where do you take it? This will go to realization account. This will go to realization account. Okay. Because of which realization account shows a loss of 37,175 only. Now this loss will be passed on to whom? Equity shareholders. Okay. So let's close the books of equity shareholders now. Now equity share capital you will plot here. Yeah. Equity share capital you will plot here. Okay. So if you look at the balance sheet of two companies, you will plot the equity share capital. And the equity share capital have also got some reserves. So their reserves will also be brought here. In case of K Limited, there was no reserve. So that's why a reserve was not brought here. Okay. And there's a P&L balance 97,175. This is again picked up from the balance sheet of L Limited. All of these are reserves, in a way, reserves of L Limited. Yeah. Corresponding to this, what will happen? Corresponding to this, you will also transfer the purchase consideration, which is in the form of equity shares. You will transfer the realization loss and the cash. So, of course, cash has to be the balancing figure, but this balancing figure, anyways, we have been told in the question itself. Okay, so this is matching. Fine. Yeah. So that's how this account will be closed, and LK Limited, there again, that account you'll have to close. Why? Because all the assets you'll receive from LK Limited, you'll have to distribute. Yeah. So all of these ledgers you'll have to prepare. Yeah. So that's how you will close the books of L Limited. Okay. So now, any questions, any doubts that still remain? Okay. Riddhi is asking, sir, how to know about value of inventory is already prepared? So what do you mean by value of inventory is already prepared? See, I think as around the inventory, first of all, you should look at the balance sheet which is given in the question. Okay. Just to avoid all of these doubts, because I can see a lot of doubts around inventory and trade receivable. To begin with, I think first point that you are not looking at is what? This amount is given in the balance sheet itself. So I'm not calculating this on my own. Can I do that? Not possible. Why? Because the financial information which is given in the question, that information I can use. How can we add any item in the balance sheet? Okay. To begin with, it's there in the question. Now let's suppose if K and L have to close their books. So can the closure be possible without removing these exact amounts from their balance sheet? Tell me. Can you close the balance sheet of any company without removing all the assets and liabilities which are appearing at their book values? Tell me, can you do that? Can you close? Dilip says no. Riddhi says no. So that is what exactly we have done. We have removed these inventories as well as trade receivables at their book value. Let's suppose instead of book value, we cut down this value. Okay. Let's suppose instead of 2,25,000, we take this value at 2,20,000. So what will happen? That will result into a realization gain or loss. Yeah. Because any differential will go where? Realization gain or loss. That doesn't make any sense. Why? Because for the vendor company, only the book values are required to be looked at. Agreed values, whether those are agreed at amount higher than book value or amount lower than book value, that agreed value is relevant for which party? Transferee company, not the transfer company. Understood? That's how you are required to consider this always. Clear? Yeah. Then this other question comes from Anil Army. He's asking, sir, we have to follow AS 14 in transferee books, and why we are just sketching accounting in transfer books without following any standards? So, what makes you say that we are not following the accounting principles? Tell me, what makes you say that? Yeah, so we are following the accounting principles only. If you don't follow these accounting principles, so do you think this is a creative accounting that we are looking at? No. So these are the accounting principles. So all of these accounting requirements we are doing are based on accounting principles only. Understood? Yeah. And in respect of the company which is coming to an end, if you don't know how to close their books, can you just simply complete the amalgamation process? The answer is no, because amalgamation process doesn't mean only looking at one of the companies. The other company which is coming to an end, you also need to close that. Huh? That's how you'll understand the complete accounting requirement. Okay. Okay, Tambeshwari is saying, sir, WHT not prepared. I would request you to please use the full forms. Huh? So some of these terms that you use on your own, I don't understand. Huh? Very, very difficult to understand. So what do you mean by WHT? All right. Any more questions if you have? No, everyone clear? Okay, so then I think there's one more query coming up. Just a minute. Huh? Malu is asking, sir, in the additional information in point B, 1, I can't understand that point. How to find out? Okay, so there again, you are talking about inventory and trade receivables. So inventory and trade receivables, you need to pick them at book value. Why? Because we are looking at the closure of books of transfer company. When you will go look at the, or you will record that in the books of transferee, that is where you will create this provision. Balesh is asking, sir, pre-share excess payment taken in realization debit side, why not equity shares? Because that anyway has to be settled with the equity shareholders. Okay. Why? Because if there is any excess or shortage, who will bear that? Equity shareholders. So that's why it's not taken. Okay. Sai is asking, my queries at the time of transfer of realization account, 2 ledger entries were done. Why can't it be a single ledger? So I couldn't understand what do you mean by 2 ledger entries. Huh? So if you go look at this realization account, what are the 2 ledger entries you can see? Because in the ledger, there is only one entry. So what do you mean by 2 ledger entries? So I don't see any sort of entry which is not required to be taken to the realization account. Okay, sign. Please understand this. Huh? You're saying 15.5 and 7.5. So 15 point, I think you're talking about this 15.6. Yeah. Now please understand, if there is some purchase consideration received, if you don't put that, then your realization account is not completed. So this anyways you are required to take. Yeah, because how will you close your realization account? How will you get to know that through realization, through this closure, whether there is any gain or loss? Till the time you don't pass this. Okay, so there is only one entry. Yeah, I would call it as one entry, and that is how you are required to do this. Okay. Okay, then I think Bhavna is saying, sir, how do we calculate P&L account balances? See, P&L account balances, once again, you are not required to calculate. Those are given in the question itself, in the balance sheet. Can you see this? Yeah? Clear? Clear? Bhavna, clear on this? And I can find one very common problem with everyone. You are not looking at the question at all. And that's what is very, very important. So most of your queries are given in the question itself. Yes or no? Now, if you look at this, okay, so Bhavna is saying, no, sir, I give suggestion to pass entry of P&L. So what do you mean by suggestion to pass entry of P&L? I couldn't understand this. Entries are not required. Okay, so that's why you should not get onto that. Yeah. Okay, Larry is asking, sir, can you please again show how this cash is calculated? Sure. So now, in terms of total purchase consideration, we were told that you compute the intrinsic value, means you compute the net assets. So first of all, we computed the total net assets of both the companies. So these were the total net assets. Okay. 15 lakh 60,000 and 7 lakh 90,000. Now from these two, the amount of purchase consideration in the form of equity as well as preference shares has been reduced. Where do you get these amount from? This has been calculated in working note number 1. Okay, in this working note number 1, 4 lakh 40,000, 10 lakh 56,000 is the amount of preference and equity shares. Similarly, 330 and 396 is the amount of equity and preference share. Take the total of these two. This is what you will deduct from the total value. So the balance that you get will be paid in what form? Will be paid in the form of cash. That's how you will calculate this. Clear? Clear on this? Yeah, so I think Aman seems to have solved this one. I'm not sure. Okay, Apurv has a query. He's asking, sir, in the C adjustment means the adjustment ignored. Yes, yes, you're right. I think you're talking about the third point. Yes, you're right. Okay. Tambeshwari is asking, sir, why? So I think that is again not going to be relevant. Why? Because the books of LK are not being prepared. Okay. So you can just ignore it. So many a times there could be some information in the question which is not relevant. Okay. So you need to just go by that. Clear? Apurv, clear? Larry, I think you're clear. All right. Any more questions if those are left? Any more questions? Okay, great. So Hardik has a question. He's asking, sir, there is 5% debenture that I know it will be adjusted by LK Limited. Okay, so let's get on to this requirement. So which is about the debentures. So now if you look at the realization account, now debenture is what we have in the case of K Limited only. Okay, so K Limited holds debentures amounting to 2 lakhs. Now, if you look at the requirement of the question, it says LK Limited will issue such amount of fully paid 6% debentures in LK Limited as is sufficient to discharge 5% debentures in K Limited at a discount of 5% after takeover. So what does it mean? That 2 lakh is the amount of debentures. So at what amount it will be taken over? Can you tell me? Now let me just go to one working file to solve this. Now, please understand this is not a part of the solution because you are requesting this as to how do we compute it. That's why I'm showing you. So please don't get confused. Okay. So the value of debentures in the books of K Limited is what? 2 lakh. Okay, that's the value, right? This will be taken over at 5% discount. So what does it mean? You will compute 95% of this. So means it will be taken over at 1,90,000. Okay, by LK Limited. So the query is that if LK records it, so how will you calculate this? Yeah. So LK has to record or LK will take over 1,90,000. Okay. Because it's been taken over at a discount. Then it says the number of debentures that you will compute, okay, which will be fully paid up. So what is the number of debentures currently? We don't know. So let's assume that is of rupees 100. Okay. So let's suppose each debenture is of rupees 100 because we are not given that. Let's assume that is of rupees 100. So it says issue of such amount of fully paid 6% debentures as is sufficient to discharge 5% debentures. Now, tomorrow, when you will issue 6% debentures, when LK Limited will issue 6% debentures, so what will happen? LK will issue 6% debentures in LK Limited. That will be equivalent to 1,90,000. Yeah. And this value will be sufficient to discharge 5% debentures in the books of K Limited at a discount of 5%. Simple. Clear on this? Clear on this? Yeah. All right. So then I can see one more question coming up from Aman. So Aman is asking, so can you please show how the loss of equity shareholders is computed? Yes. So the loss of equity shareholders is what? The balancing figure of the realization account. Yeah. So we'll plot all the assets, all the liabilities, purchase consideration, and the excess payment received from preference shareholders. So this is the balancing figure that you. So if you'll compute this, let's suppose if you prepare this, if you plot all of these amounts, so this is going to be the balancing figure. Okay, that's the loss. Clear, Aman? Yeah. Yeah. All right. So yes, yes, Hardik. Right? Yeah. All right. So I think we can take a break now. Yeah. So we can take a break now and move on to our next topic that is about consolidation. So we'll start with that after the break. Okay. So let's break now. Okay. All right, so we'll now start our discussion with consolidation. Okay, so that is about AS21. All right, so talking about consolidation, we'll just try to understand first of all, what is the meaning of consolidation? What is the meaning of consolidated financial statements? Where do we have this requirement of the consolidation? So let's try to understand some of the basic principles around the consolidation. Okay, now for us to understand about the consolidation, there are few terms which become important in respect of this consolidation. So one is the understanding of the holding company. Second is the understanding of the subsidiary company. And third will be about the group. So what I'll do is I'll just take you to one working file. Okay, so let's talk about these. Okay, some of the terms we'll try to understand now. Say there is a company H Limited. Now this company has control over another company, say S Limited. Yeah. So now this H Limited has control over S Limited. Now in this case, these two are separate legal entities. So that's why what will happen? H Limited will be required to prepare its financial statements. Similarly, S Limited will also be required to prepare its financial statements. Yes or no? Yeah. Now, over and above the financial statements which both these companies are required to prepare, because H Limited has a control over S Limited. So that's why what will happen? H Limited will be considered as holding company. Okay, so that's the term you can assign to H Limited, holding company, or you can say parent company. And this S Limited, this will be considered as subsidiary company. Yeah. And the moment we say that there are two companies which are having this, so what will happen? Over and above the financial statements which H Limited was required to prepare for itself, one more financial statements will have to be prepared by H Limited. And that is what you call as consolidated financial statements. In which case, H Limited will combine two entities, H as well as S. They combine these two entities, and the combined information of these two entities will be included in that set of financial statements. Or you can say consolidated financial information will be included in that financial statements. That is what you call as consolidated financial statements. Okay. Now the point is that what do you call this first financial statement as? Okay, so this one is very commonly called as standalone. Very commonly we understand this by standalone. Standalone means which includes the information of H Limited only. Similarly, this is also standalone, means which includes the information of S Limited only. But in this CFS consolidated set, the information of both H as well as S will be included. Means this will be a consolidated information for both of them. Yeah. Yeah. So understood about the meaning of holding and subsidiary. Yeah. So Larry is asking, sir, then S Limited need not prepare its own financial statements? No. See, the requirement for a company to prepare its own financial statements will continue to remain. We can't say that just because H is required to prepare CFS, therefore H may not prepare its own financial statements, or therefore S may not prepare its own financial statements. No, you can't say that. Okay. So this will continue to remain. This will also continue to remain. You can't skip that. You can't ignore that. So this is an additional requirement. Now the another question could also be there, that can S prepare the CFS in respect of this H and S Limited? No. See, the responsibility to prepare the consolidated financial statement lies with the holding company, not with the subsidiary company. Of course, to prepare this consolidated financial information or the set of financial statements, support of S Limited will also be required. Yes or no? What is going to be the support? This entire financial information of S will have to provide to H. Only then H will be able to prepare. Yeah. But who will be responsible for this? Can we say S will be responsible for that? No. The responsibility for this lies with H. Okay. Clear on this? Clear on this, everyone? Okay, Preeti has a question. Preeti is asking, sir, suppose if H is controlling indirectly in another company, then how will H prepare the financial statements? Sure. So let's talk about that situation also. Now, let's suppose we have a situation wherein H Limited holds, say, 70% shares of S Limited. Okay. And let's suppose H Limited also holds 60% shares of, say, P Limited. Okay. Or to answer your question very specifically, we can say you may ignore the 60%. Let's suppose the control of H is there in two companies. One S, which is direct, one P, which is indirect. Now, indirect again could be there. A lot of mechanism through which indirect control could be there. We are not getting into that assessment right now. In both the cases, S as well as P, because H has got control, therefore, what will happen? Both these companies, S as well as P, they will be considered as subsidiaries. Okay. In which case, H will be required to prepare CFS, wherein three companies will have to be consolidated. Which are those? H, S, and P. All three. Okay. And that is what you call a group S. Now, in the previous example, there was a group. What was the group? Group was comprising of two companies, H and S. In this example, there is a group which comprises of three companies, H, S, and P. Okay. And this CFS means what? CFS means financial statements of the group companies or financial statements of the group. Financial statements of the group. Now, in this case, there is one very, very important principle you need to remember, that whenever consolidated financial statements are prepared, so all the group companies that we have in the group, they are treated as if they are not three. Okay, so currently in the group, there are three, but you will not treat as if there are three companies. You will treat as if it's a single economic entity. It's a single economic entity. Okay, So that's the approach you need to follow while preparing consolidated financial statements. Means you'll have to treat as if these are not three companies, as if it's only one company, and accordingly prepare the consolidated financial statements. Understood? Clear on this? Any questions, any doubts around this? Yes, everyone clear? Okay, Larry has a question. Larry is asking, sir, what if H is a subsidiary of another holding company like say G? Then H will prepare CFS or G will prepare? Okay, so let's talk about that situation also. See, as I told you, there could be hundreds of situations. Huh? You need to understand the concept. Let's suppose if we extend this, okay, currently we are saying there is H limited. Below H we have S and P. Now in this case, H is required to prepare CFS. Yes or no? Now Larry is asking, let's suppose there is another company, G Limited. And G Limited has a control over H. Now in this case, should this be a problem? The answer is no. Why? Because there are two groups we are looking at. One group wherein there are four companies, G controlling H and H controlling S and P. So this group comprises of four companies. So who will prepare CFS for this group? G. Okay. There is another group wherein there are three companies, H, S, and P, for which who will prepare the CFS? H. Yeah. Similarly, this consolidation requirement could be there for every holding company. So now we are looking at a situation wherein there are two holding companies. So H is a holding company for S and P. So that's why H will be required to prepare CFS. G is the holding company for H and indirectly for S and P. So that's why G will also be required to prepare CFS. But in all of these cases and for all of these entities, their own financial statements, means financial statements of G, financial statements of H, S, P, they are always required. Okay, so that is going to be at the first place. So there is no exemption around it. Yeah, own financial statements, standalone financial statements will always be there. Understood? Understood? Okay, so Hardik is, yes. Sai is asking, H is the intermediate holding company. See, in this example that we are looking at, if you talk about S and P, okay, if you talk about these two companies, in a way, these two companies have got two holding companies. One is direct holding, H, and one which is eventually controlled by G. Yes or no? So that's why S and P have got two holding companies. What are those? H and G. The immediate holding company is what you call as technically intermediate holding company. Or you can say immediate holding. And G Limited is also called as technically ultimate holding company. Okay, so these are the terms that you assign to these types of companies. Ultimate holding company. Okay, clear on this? Yeah, so these are the terms you may get to see. Okay, then I think Anil Army is asking, sir, already G is preparing, right, which covers all the companies. Yes, but still that is required to be done. Okay. Sai is asking if the shareholder of H Limited permits. So that's an exemption. Huh? I'll come to that exemption later on. I would request you to please, first of all, focus on what we are discussing. Let's not move ahead. So all of those points will follow. I'll come to that later on. Okay, so Larry is asking, is there any restriction to how many subsidiaries a holding company can have? No. So there is no restriction. So within the group, so if you talk about some of the large companies, say for example, Reliance, if you say for example, Airtel, okay, Tata Group, they have got hundreds of companies in the group. Yeah, they have got hundreds of subsidiaries. There's so many companies which have so many subsidiaries. Huh? There's no restriction. And now the question will be that, sir, is the consolidation required for all of those companies? The answer is yes. Yeah. So all the group companies which are there, consolidation is required to be done for that. Okay. Kasak is asking, sir, if G is the ultimate holding company which prepares CFS, so in that case, H Limited will also be required. Yes, that will also be required to prepare CFS. Okay. Now, in relation to this consolidation requirement, the relevant accounting standard that we have is AS21. So what is the purpose? So where do we use this AS21? Now please understand, for H Limited in the given case, or G Limited for that matter in the given case, to prepare this consolidated financial statements means whether the holding will prepare consolidated financial statements or not. AS21 doesn't talk about it. Okay. So this requirement to prepare consolidated financial statements doesn't come from AS21. So where does it come from? Companies Act. But the moment we say that a company is there or a holding company is there which is required to prepare consolidated financial statements, then for preparing such consolidated financial statements, which standard you will refer? You will refer AS21. Means AS21 gives you the guidelines, gives you the principle for consolidation. But AS21 does not tell you as to when the consolidation is required. Okay. So that means once you have this requirement of consolidation in place, that is when you will go to AS21. Understood? Clear on this? Yeah? Clear on this? Any questions on this? So there are a lot of other terms we are going to discuss. Yeah. Preeti is asking, sir, does it tell? I think you're talking about AS21. How to prepare CFS? Yes, of course. That's what we are saying. Huh? How to prepare CFS, what accounting principles you'll use, what is the basis, all of those things. Where do they come from? AS21. But when to prepare, that is not covered by AS21. When to prepare has to be looked at from the requirements of Companies Act. Okay, that is what we have just looked at. The moment a company will have a subsidiary, consolidation will be required, or an associate or a joint venture, consolidation will be required. But associate and joint venture will pick up later on, not right now. Okay, we'll get on to that part later on. Yeah, otherwise that will create confusion. Fine. Clear? Any more questions on this? No? All right. Now, let's look at one more example. So there are a few terms that we are going to discuss first of all. So let's say H Limited holds 80% shares of S Limited. Okay. And there is another structure wherein P Limited holds 100% shares of Q Limited. Yeah. So now in this case, When 80% shares of S Limited are held by H, so what do you call H as? Can you tell me? What do you call H as? Holding company. Yeah. Holding company, or you can say the one which holds majority shares. Yes or no? So this is holding company. Similarly, P Limited will be called as holding company. Yeah. Or you can say you will call S Limited as subsidiary. Similarly, Q Limited as subsidiary. Yes or no? Now, when S Limited is owned 80% by H, so what does it mean? That there must be another shareholder or various other shareholders 80% shares of S Limited. Yes or no? Yes or no? So when 80% shares of S are held by H, what does it mean? That there has to be some other shareholders. Let's suppose that is A Limited. Let's suppose that is A Limited. Now A Limited, let's suppose, holds 20% shares of S Limited. Now in this case, can we say that A Limited is the holding company of S Limited? Tell me. Can we say that A Limited is the holding company? The answer is no. Why? Because the standard says only when 50% or more, only when more than 50% shares are held, that is when the company becomes the holding company. Otherwise not. So that's the principle that you follow under Indian GAAP. Okay. Now in this case, because the subsidiary S Limited is not fully owned, unlike what you see in case of Q Limited. In case of Q Limited, the subsidiary that you have, what do you call it as? Fully owned or wholly owned. It's a wholly owned subsidiary. What does it mean? That all of its shares, 100% of its shares are held by holding company. Yeah. So subsidiaries could again be of two types: wholly owned or partly owned. What do you mean by partly owned? Means one part of its shares are held by holding company and one part will be majority part. And the remaining part means the minority part is held by whom? In case of S Limited, minority part is held by whom? What is held by which company in case of S Limited? Tell me. This minority part in case of S Limited is held by which company? A Limited? Yes or no? That's why this A Limited in case of S Limited is also called as minority interest. Minority interest. So that's the terminology that you use. So the shareholders which are holding remaining shares, or you can say all the shareholders other than the holding company, all the shareholders other than the holding company, what do you call them as? Minority interest. So that's the term you will assign to them. Minority interest. Clear on this? That's the term you will assign to them. Minority interest. Okay. Clear on this? Everyone clear? Yeah. So there are few terms we have discussed: wholly owned subsidiary, partly owned subsidiary, holding company, minority interest. See, all of these terms we are going to use as we move further in terms of our accounting requirements under AS 21. Yeah. Now another question may arise. that, sir, when it comes to consolidation, means when it comes to preparation of CFS, so should the CFS include only wholly owned subsidiaries or only partly owned? No, it doesn't matter. See, a subsidiary is a subsidiary. Whether that is partly owned or wholly owned, both of them are required to be consolidated. Okay, both of them are required to be consolidated. It will not matter whether that is wholly owned or partly owned. Then Anil Army is asking, sir, in case it's more than 20%, then what would be the case? So let's change it up. So you need to understand this principally. Huh? I think you can create hundreds of examples. And by doing that, you are only adding your confusion. Huh? So let me just change it. Let me just say it is 70% and this is 30%. So there again, what will happen? This subsidiary will continue to be a partly owned, holding will remain holding, and A Limited will continue to be called as minority interest. Why? Because any shareholder or any shareholder other than the holding company, what is the term you'll assign for that? Minority interest. Why? Because they are not holding majority shares, they are holding minority shares. Yeah. Okay, Larry has a very important question and I would request everyone to answer. Larry is asking, sir, in this case, will H and A both prepare CFS? Tell me. Over to you. She is asking, who is required to prepare CFS? H and A both? Tell me. Tell me. Kasak says H Limited will prepare. Yeah, that is what we just discussed. That it's the holding company which is required to prepare CFS. Okay, and who is the holding company? H Limited. Yeah, so again, a very good question because this confusion may arise. So who is required to prepare CFS? Only and only holding company. As around these other shareholders, whether they are required to prepare or not, we'll come on to that part later on when we'll discuss associates, joint ventures. That is when we'll pick up. As of now, for the purposes of AS21, please remember, for the purposes of AS21, what do you need to remember? That the holding company prepares CFS, in which subsidiary will be consolidated. Okay? Clear on this? Okay. Then I think Shibu has one question. Shibu is asking, if H and A both have 50%, then will they be considered as holding companies? The answer is no. So that's a different situation altogether, which will be of the joint ventures. And we'll talk about that later on, not right now. As of now, what do you need to remember? That as per Indian GAAP, when there is more than 50% shares, more than 50% voting right, that is when the control is acquired. Okay. And the moment you say a company has a control, that is when the company becomes the holding company, otherwise not. Okay. So control is important, but how that control is acquired, that is again we have discussed. Fine. Clear? All right. Any more questions? No? All right. So what we will do is, we will now look at some more requirements as around the basic understanding only. Okay, so as of now, we have not moved on to the accounting requirements. Huh? Okay, so now, some of the things we have discussed. All right. Now, we talked about requirements to prepare CFS. But there is one situation wherein an exemption is provided. So what do you mean by exemption? Means a holding company is not required to prepare CFS or may not prepare if it wants. Now, this is again important to understand. What is the meaning of exemption? Exemption means it's an option available to the holding company. Okay, so let's try to understand that situation. Then we'll talk about it. Now, what is that option which is available to the holding company? Now, this exemption can be understood with the help of an example. So what I'll do is, I'll just move on to one example. Say, for example, there is a company A Limited. A Limited has control over G Limited. G Limited has control over H Limited. H Limited has control over S and P. Now it could only be S or only P. As of now, I have covered this structure because this is the structure that we discussed earlier also. And you had some questions around this. So that's why I have intentionally covered the same structure. Okay. Now in this structure, can you tell me which all companies are the holding companies? Over to you. In this structure, which all companies are the holding companies? Over to you quickly. Great. So Dilip says A, G, and H. Yes. So these are all holding companies. Therefore, all these three companies are required to prepare CFS. Yes or no? All these three are required to prepare CFS. Correct? Yeah. Now, let's look at it from the perspective of H Limited now. For H, G Limited will be the intermediate holding company. For H, G will be the intermediate holding company. Yes or no? So G Limited will be intermediate holding company. And can you tell me ultimate holding company here? Do we have any ultimate holding company here? Yes. A Limited. Very good. So A Limited is the ultimate holding company. If you look at it from the perspective of G Limited, sorry, H Limited, right? Now the point is that H Limited is required to prepare CFS. Okay. No doubt. Why? Because this has got two subsidiaries. There are two subsidiaries. Yes or no? Yeah. I think Nancy also answered this. A is the ultimate holding company. Great. Now, if let's suppose H is neither listed nor in the process of getting listed. Now, there are four conditions. H is neither listed nor in the process of getting listed. So this is not listed. Not in the process of getting listed. You need not write these points. All of these are written in the study material as well as the presentation that anyways you are getting. Okay. Further, H Limited has got the approval from its intermediate holding or the ultimate holding company not to prepare CFS. And either its intermediate parent or its ultimate parent prepares CFS in which they consolidate H and of course the group of H. So if these four criterias are fulfilled, all the four, then what will happen? H will get a choice. Now, what will be the choice? If H wants, it can prepare CFS. But if H doesn't want, it may not prepare CFS. Yeah. So that's the exemption which is available. That's the exemption which is available to H. Okay. Which H may avail. And that's why we are saying it's an option. Exemption doesn't mean that the moment all these four criteria are fulfilled, H will not be allowed to prepare CFS. No. It may happen that all these four criteria are fulfilled, but still H wants to prepare the CFS. Okay, so nobody is stopping H from doing that. But if H doesn't want to prepare, then the point is there any option available through which H can avoid preparing the CFS? The answer is yes. That's the only situation through which H can avoid that. Okay, everyone clear on this? Everyone clear? Quickly, everyone clear on this? Any questions? Any doubts? Tambeshwari is asking, sir, first the CFS are prepared by H, after CFS are prepared by G. So there is no order. Huh? There is no such order because each company will prepare its own CFS. Okay. Yeah, clear on this, everyone? All right. So there is another important aspect as around the consolidation. Let's try to understand that. Okay, so I can see some of the queries coming up. Okay, so Kasak is asking, sir, if any of the condition is not met, then H will be mandatorily required to prepare CFS. See, for H to avail this exemption, all the conditions have to be fulfilled. Yeah. Preeti is asking, sir, in this case, there are two intermediate holding company. Is it possible to have two intermediate holding? Yes. See, in a group, there can be 10 intermediate holding companies. Huh? So if you look at the large groups, okay, so they have a very complex structure wherein there are a lot of intermediate companies, which is very, very common. Huh? Manvi is asking, sir, A will prepare CFS of GHSP? Yes. Yeah. So the moment you prepare CFS, all will be consolidated. So it will not happen that they will ignore one or they will ignore two. No. Larry is asking, is there any exemption to intermediate holding company? Yes. Same exemption is there to intermediate holding company also. Exactly same what we discussed, provided they meet the criteria. But that exemption cannot be available to ultimate holding company. Okay. And you can go back to those exemption or those criteria. Ultimate holding company will not be able to meet the criteria. Yes or no? Yes or no? Yeah. So intermediate holding companies can avail that, but ultimate holding companies are not exempt in a way. Okay. Clear? All right. So what I'll do is I'll just quickly discuss one more situation with you. That is more about consolidation, and then I'll come to your questions, doubts. Okay. And then we'll close our discussion for today. Okay. I would say this is something in continuity and very, very important as around the consolidation. Now, if you remember, there was a situation of acquisition. Let's suppose there is a company A Limited. It acquires, say, 55% shares of B Limited. And B Limited continues. Do you remember? We ignored this at the time of amalgamation. Yeah. So we are saying that B Limited will continue. And we use the term acquisition for this. Remember? Yeah. We use the term acquisition for this. And we said that acquisition is not covered by amalgamation. Yeah. So now that acquisition is something which will get covered by AS21. Why? Because if A Limited acquires shares of B Limited through which A Limited is getting control over B Limited, and if B continues, then what will happen? B will be considered as subsidiary of A, in which case A will be required to prepare CFS. And which standard will apply in that case? AS 21. AS 21. Okay. In this case, at this point of time, when B is acquired, when over B, A is getting the control. So the moment this will happen, so let's suppose this is acquired. Okay, so the moment this control is there over B, so what will happen to B? B will be considered as subsidiary. And the moment you say B becomes a subsidiary, so what will happen? AS 21 will come into the picture. AS 21 will come into the picture. Understood? Clear on this? Everyone clear on this? Yeah? All right. So now, as around this situation, let's try to understand this point. Say, A Limited has acquired B Limited. Okay. And this acquisition takes place, let's suppose, on 13th December 2024. So that is when A Limited acquires, say, 70% shares of B Limited. Okay. Now the question is that prior to 30th December, what do you do? The answer is you'll do nothing. Why? Because the consolidation has to start from the date control is acquired. Okay, so in this case, A Limited will prepare its standalone financial statements. For what period? 1st April 2024 to 31st March 2025. But the CFS which A Limited will prepare, can you tell me what period will that be for? So this CFS which A Limited will prepare, for what period that CFS will be prepared? Will that be from 1st April to 31st March? The answer is no. Pranav says that will start from 13th December 2024 to 31st March 2025. So the consolidation has to start from the date control is acquired. Okay. And consolidation has to stop the date the control is lost. But that is not really relevant at current level. Huh? So we'll not talk about it. Important point is to understand this cutoff. Okay. So this period of start of consolidation. Yeah. So as around this consolidation, there are a lot of things that we are going to start with in our next session. So what we can do is maybe we can just close our discussion for now, and any questions, any doubts that still remain, we can discuss that. Okay. Yes. Over to you. Any questions, any doubts that you have? Yes. Quickly, over to you. Preeti is clear on this. Great. What about others? Any questions, any doubts? And it's important that in the next session, at least this small part that we have covered around consolidation, all of these terms are very important. So this you should cover. Nitin is saying for 24-25, it will be less than 1 year, which is okay. Yes. Going will be correct. Okay. Hardik has a question in illustration 11 of amalgamation. So Hardik, I would request if you can just point out your query in relation to this particular illustration. So I'll make a note of this because these are large illustrations. So what I'll do is I'll just specifically look at that query and come back to you. Okay, so that is better. Otherwise, to read this entire illustration, solve the entire solution, that is going to be very, very difficult. Okay. Yeah, so maybe you can just be specific that in this question, what is your query? Maybe give me the page number or that particular section. I'll look at that and come back to you. Okay,
Sir,
Preeti,
sir,
yes,
sir, in illustration 7, I asked one query regarding LK Limited amalgamation.
yes.
There, LK Limited issued individual equity shares, individual preference shares, individual cash considerations to K Limited and L Limited.
Okay,
For that, individual ledger accounts for existing realization account was prepared.
right.
What my query is whether that consolidation is required or not for that total equity issued or required or not, that I'm asking.
No, so are you saying the ledger account of LK Limited?
Yes, sir. Yes, sir.
No, that is required because if let's suppose a ledger account of LK has been opened, why? Because you are taking that to the realization account.
Yes,
The
sir. Yes,
moment you take it to the realization account, so what will happen? Let's understand the books of this vendor company. They have opened one ledger.
yes, sir.
If you don't close it, then this will remain open. Okay,
Okay,
so
okay.
for you to close the ledger, you need to prepare that, and you need to, because see, the company is coming to an end. The company is getting wound up. Yeah, so that's why it's important.
No. My query is the total equity issued we have to consolidate or not, that I'm asking, sir.
So what do you mean by total equity issue?
To each K Limited and to L Limited, we have issued separately equity. That consolidation is not required in the solution, I'm asking. Whether it is required or not in the solution, I'm asking.
No, so consolidation, why will you do consolidation? Because you are closing the books of each company separately.
Okay, okay.
Yeah. So why will
So,
you do that? So it's an individual company. And that is what I exactly told you. Many times you will have a confusion. Why not consolidated? You should
okay.
not do that. That will be inappropriate because first you prepare the books of K Limited.
Yes, sir.
K has nothing to do with L. When you
Okay,
close the books of L Limited, L has nothing to do with K.
okay,
Both these are two companies, both are separate. So how can you consolidate? The moment you consolidate, that will be incorrect. That will be inappropriate. Okay. So you can't do that. Fine.
okay, okay, sir.
All right. So what I'm doing is I'm just making a note of what Hardik has just shared. Okay. Then I think Neeru has also shared. So I'll just make a note of this query also. Fine. All right. Any more questions? Any more doubts? Abhishek is asking, sir, treatment of knockoff can we show by working? So, see, treatment of knockoff is very simple. Why to get into the working? Whenever you will have any such asset or liability which needs to be knocked off. So, the company which will close the accounts, do they need to get into this? The answer is no, they don't need to get into this. The company which will acquire them, all of those assets or liabilities. Okay, so the purchasing company will knock off those assets or liabilities. So when they will record assets and liabilities, so they will knock it off. So that's how it will work. There's no working which is required for that. Okay. Any more questions? Abhishek is clear. Good. I think I've noted questions of Hardik, and this other question came from, I'm not sure. Let me just look at this chat. Okay, Neeru. Yeah, so I'll just make a note of this. All right, so anything else on this? Preeti is asking about some more. See, let's get done with some of these things that we plan to cover. As the time will permit, we'll definitely take care of. We'll try to include that part as well. Again, that depends. But if you have any specific question in relation to any of these questions, whether it is in relation to previous years or all of that, you can just give the reference and let me know, and I can just come back to you with your doubts. Okay. no worries. You can just give the reference of that and I'll just try to come back on that part as well. That's absolutely okay. Okay. But I would suggest you should practice all of these questions on your own as much as possible. So it's a good thing, Preeti, you have been doing this. Yeah, it's advisable. You should do that because we can't solve each and every question. Yeah, that is something which you should plan to cover. And of course, doubts are most welcome. Fine. All right. So I understand you don't have any further questions, doubts. So maybe we can close our discussion. Yeah. Okay. So thanks once again for your time and for this wonderful participation. Yeah. Thanks so much. Manish, we can close the discussion.